Hi everyone, in this video I'm going to be walking through the homework problem 11.1, and this will be the first in a series of videos that walks through the homework problems here from our class packet. So again, we're in chapter 11 and this will be the first homework problem. In this problem we have a listing of a shareholders equity section from a balance sheet. So here you can see common stock, paid in capital in excess of par common stock, preferred stock, retained earnings, treasury stock, contra equity, account, and then the sum of all those to be total shareholders equity. Okay, so let's go ahead, and this will be this is the beginning of the year here, or sorry, I should say X1. So then we're coming down to the these are transactions that happen in the second year, so 20x2 we'll say. So that could be 2022 or whatever, so we'll just put that in as the year. And then we'll go through and put our journal entries in here. So we want to record entries for all these transactions. So the first one says we issued 20,000 additional shares of preferred stock and received $650,000. So again, we've got cash coming in, as you kind of deduce from us saying, that we received that cash. And again, we're issuing preferred stock, and that'll be our par value for the credit. So we take our 20,000. What does it say? Par is $25 par value. So we can take $25 par value times 20,000. So 500,000 is the par value times the number of shares issued, and then the paid in capital in excess of par preferred. It's a long name there. Give ourselves a little space. And that amount is just going to be the excess over the par to match the cash that was received, kind of the market value. And so that's 150,000. And we'll say issued preferred shares for our explanation. Okay, so that was on the 15th of January. And then on, let's see, I'm just going to copy and paste in to get our formatting. I think this is going to be a 2-line entry here, so I'm just going to delete that up. Okay, so on the 20th of February, we declared dividends of $3 per share. It's not going to be paid till the end of March. Remember, the record date is kind of just informational, so no journal entry there. And when we declare the dividends, we're going to record a reduction in retained earnings, and we're going to record an increase in our dividends payable account. And we'll say dividends declared, not that amount there, but it was $3 per common share stock, per share of common stock. So $3 times our outstanding shares, and that's, here's where you're finding the, outstanding is up here. Here's that par value, we used for the first one. So information that you need is kind of located here in the narrative attached to the line item. So be sure you know where to look for that. Okay, so we did our dividend declaration entry there. And then on March 31st, I think we paid the dividends now. And so now it's going to be our debit to reduce our payable. And our credit will be to cash. And that will just be the 210,000 there. So this was dividends declared, and then this is dividends paid. So you can see kind of as with any typical payable transaction, an increase and a decrease. So really the effect of these two transactions, because those kind of cancel each other out, is that retained earnings is decreased and our cash payment is, cash that the business has is decreased as well, because we're basically remitting some of the business's savings, if you will, out to the shareholders. Okay, on April 15th, we purchased back 10,000 common shares. So here we're going to have treasury stock. And remember, there's no, you can basically ignore, par value when it comes to the treasury stock transactions. It's going to be the market share is what we care about there, and it's 10,000 shares. So we have 90,000, and we'll say 10,000 shares. Oops, repurchased. Okay, that's that. And then the last transaction we're going to have is on the 31st. And we said we closed $2 million of earnings from the income summary into retained earnings. So remember, this is kind of related to those closing entries that we would do. And so when we have earnings, we're going to increase retained earnings. So, I mean, you could go through the whole process of those closing entries, but just one way to remember what we're doing from a perspective of retained earnings is increasing it. And so we have a credit. Remember our dead circle, the CRCL, or it's the revenue. Now I got to write it out. It's the So remember, we can say capital, as in place of equity, essentially. So, or you think this is revenue or retained earnings here, also under the C. So the credit's the increase, if that's helpful. And then when we do our last entry, remember, we're just closing out the income summary. And you can kind of deduce that if you didn't know that, debit or credit, you did deduce just because you know that an increase to retained earnings is done with a credit. And we'll say close income. Okay, so there's all our entries, and that was our part A. Now we want to prepare a statement of retained earnings for the year ending 12/31, X2, this year, essentially. And so remember, when we're going to pull in retained earnings type transactions, I'm going to pull in an example. I'll leave this pasted into the template here as well, and I will have this available in the uploaded version, so you should see a copy of that in your file when you go to do our problems here. But I'm going to kind of be creating this on the fly here, so you'll have this able to put your answers directly into. So, did it tell us? Let me go back to that. Oh, here you go. Snyder. S-N-E-I-J-D-E-R company. Okay. Okay, so that's that. And so here we can say at the beginning of X2, this is the second year that we're looking here. So our retained earnings balance to begin at the end of year one was 500,000. So we could just put that in, because remember, we need our beginning balance. And as you can, hopefully that makes sense, that the ending balance of the prior year, remember, is basically the beginning balance of the second year. You could really say retained earnings at 12/31 X1. A lot of times in our problems in our textbook and materials uses 1/1. So basically the same thing, just beginning retained earnings. Net income here, it said, was $2 million. That's what we closed that in. That's what that journal entry was doing for us there. And then dividends payable, we paid out $210,000. and we, that was indicated in our information here. And remember, retained earnings. So when we're doing our retained earnings statement, if anything affects retained earnings like net income and dividends paid, remember those get, listed out basically there in the statement, and also, in the journal entries as well. Okay, so that's our retained earnings statement. And then the last step is to prepare the shareholders equity section. And so we can kind of copy this same portion above. This is a good example to pull from. Let's see if we can do this in here. $2 par value. Now, I'm going to start by just copying exactly what we've got in here, and then we're going to update that as needed based on the transactions that we had. So to begin, I'm just going to copy in. And in your version of this problem, let's see if I can get a little space here. So bear with me while I make this a little more well formatted. There we go. Okay, so here, this is, again, I'm just copying in directly from what we had above. Preferred stock, 10% non-cumulative. Some of this information you won't need specifically for this problem, like the fact that it's 10% non-cumulative, things of that nature. That's just some of the specifics of how the preferred stock is different from common stock. But for our purposes, we're not going to be too concerned with that. Okay. Actually, I'm going to make this a little smaller, just so we've got extra room over here to put our amounts in. I'm going to call this data C as well. Okay, so again, I'm just copying exactly what we have noted above, and then we're going to analyze and update. Okay, so that said, actually, I'm going to go through and clean up. I'm going to actually merge these cells so that I'm basically creating like one big cell, so we can put, it just makes it a little easier for putting in the amounts over here. It's a little far out, but that's okay. Hopefully this isn't going to go off your screen when you're working on the same problem. It's partially why, because these explanations, these descriptions can be so long. That's why you see it kind of carry over into the second little row down here. But I think we can make it just work in one row. A little cleaner looking. Okay, we're getting close here. Actually, I think I can use my format painter just to do it easier that way. Okay, so now, and let's go ahead and put a double underline. Okay, so here's this is going to be our updated shareholders equity section from the 1231, X2. This is 1231 X1. And, oh, hello. And so we need to look and see what changed, from this, because we talked about issuing additional shares of preferred stock. So now we've got how many? 20,000. So now we have 30,000 shares issued and outstanding of preferred stock. Before we had 10,000 outstanding, but now we issued an additional 20,000. So now we have 30,000 issued and outstanding. The authorized doesn't change. That's just the amount total it could be issued. We had our dividends, but that doesn't change. That'll change our, we're going to carry our number over here, but I just want to update the numbers essentially. We purchased back 10,000 common shares. So if we look at our common stock, we now have 60,000 outstanding because we bought back 10,000 more shares essentially through this transaction here. And so, the treasury stock difference is the 80,000 minus whatever's outstanding. And before it was 10,000, now we have 20,000 total. And yeah, everything else looks okay. No updates needed. So then our common stock is going to be, it started at 160,000. And is there any change there? I gotta think, and we gotta see if we did any entries, to common stock. No, we had preferred stock, but we didn't issue any new common stock. So it's still, I think that is 16,000. Let me put one more zero. Oh, geez. Okay, paid in capital in excess of par. Common stock, that's just still going to be the same as well. We had no, we're looking for journal entries that would affect those things. Then, as far as the preferred stock goes, we started with 250,000. That was our beginning balance, and then we added an additional credit, as an increase again to equity. So we added 500,000. So this 250,000 plus this journal entry of 500,000 gives us 750,000. And then the paid in capital, or paid in, we didn't, sorry, I got to add a column here because now we have, and let's make sure that looks the same. So now we have the paid in capital in excess of par, but that's going to be preferred. Okay, and that's just going to be our 150,000. That's that journal entry. So how you can see we added to the 250. We didn't have any paid in capital in excess of par before, but we added 150 this into X2 the second year. So we now need to reflect that in our shareholders equity line items here. And then retained earnings is just pulled over from our retained earnings statement. And then less the treasury stock, we started with 75,000, and then we're going to bump that up by 90,000. So we end up with 165,000 total. Again, 75,000 plus 90,000 gets us a total, and it's a contra equity, remember, so that's going to be a negative amount. And that gives us a total ending shareholders equity of 3,825,000. So that's our shareholders equity statement. Remember, this is just would be our bottom component when we're looking at our balance sheet to see assets, liabilities, and equity. This would be like our equity section, and all the these are just all the journal entries, etc., that affected our equity accounts. So, all right, well, hopefully that was helpful. And like I said, I'll modify this template a little bit. I'll leave the template here, and you all can work through with me then as we kind of walk through with the numbers and all that. But I will leave some of this all set up so you won't have to recreate the wheel in terms of the table formatting, etc. All right, thanks everybody. I will see you in the next video, and we'll work on 11.2.